Welcome to a Wiser Retirement Podcast. Before we get started with the episode, I wanted to let you know about a new free ebook available on our website. This ebook goes over the top reasons most financial plans fail and covers what a quality financial plan should consist of. The link to download Top Reasons Most Financial Plans Fail is listed in the episode notes. Now on to today's episode.
Hi, welcome to a special edition of a Wiser Retirement Podcast. We talk about crypto markets and discuss current events. I'm Casey Smith, president of Wiser Wealth Management.
I'm Robert Swarthout, founder, CEO, and portfolio manager of Teton Crypto Capital, and we're here to talk all things crypto.
All right, Robert. To our guests or our listeners who are like really confused right now, like what's going on? Why is a Wiser Retirement going to be talking about crypto? This is a new series we're going to start doing once a month because there's a reality in all this. Crypto's here to stay. Yep. It may seem like black magic voodoo, but it's not.
Yeah, there's parts of it that can be, a little mysterious, but I think with some good education and just, constant learning, I think there's a lot of possibility for people.
So if you don't believe us that crypto's here to stay, maybe banking giant BNY Mellon would convince you.
Yeah, there's, if you're connected to any sort of business news, there's a good chance over the last 3 or 4 months you've heard a lot of negative news about crypto in some form or fashion.
Oh, absolutely.
It has been nonstop. And I think there's different reasons why it's, some obviously is fraud. Other things I think is just pure FUD that's happening. But, it was interesting recently, the case that you're alluding to with BNY is there was one of their executives was at a conference and somebody asked them, "Are you worried about regulations?" His response was like, "Crypto's here to stay." Like very, very just like to the point.
Yeah.
And, I wasn't surprised by that, but I think that a lot of people were like, "Oh, he's willing to say that. Maybe this is real." It's like at some point, like the 150 or 200-year-old institutions, however old BNY is, like whenever they start saying something's real, maybe people will take it seriously. So I think that's...
Jamie Dimon even was like, "Oh, crypto's it's a fad." And he's reverse course.
And then you have Warren Buffett saying it's rat poison. So maybe he's too old to understand it.
I want to say, Warren Buffett's great, and there's a lot of people I think trying to chip away at his pedestal here recently. But that'd be one of my criticisms. Would be like, I get it from his standpoint,
right? Him and Charlie have been nothing but pure negative about it.
Right.
And you know what? They can't be right about everything. So I guess maybe this is the one they choose to be wrong about. So
correct. Yeah. So the Super Bowl, this year, I'll have to admit, I didn't pay a whole lot of attention to all the advertisements, but my quick takeaway was there was no FTX commercial.
There was no crypto commercials. I didn't catch one of one at all.
Okay, yeah. I was thinking that there was no, where last year it was crypto. Everything was crypto. Everybody was endorsing crypto a year ago.
And oddly enough, last year the Super Bowl would have been exactly the wrong time to buy crypto because it was down since then.
Yes, absolutely.
So, that was the Tom Brady, the FTX ones.
Yep.
And then there was the Coinbase one where they just had the QR code bouncing around a year ago, and all that was gone this year. So
yeah.
Maybe people needed a break. So.
Well, you think about, in 30 seconds, what's happened in the last 12 months in crypto. Sam Bankman-Fried, right? FTX blew up.
That was November.
Appears to be a Ponzi scheme.
Yeah. I'm only going on the record. It was a Ponzi scheme. So, the courts will kind of figure that out for us. But so that was November. And then you kind of rewind back into like late spring, early summer. So April, May, June. And that was when Three Arrows Capital and Celsius and Voyager all blew up because that was like they had been lending to each other and that all melted down.
Yeah.
And Three Arrows Capital had basically took a bet on the market, being a hedge fund, that the market was only going to go up. There was no downside, which is interesting because there's a lot of volatility in crypto. Interesting strategy. So anyways, 2022, the greater,
Now these are, just to be clear, these were not crypto tokens collapsing. These were people investing in those.
Celsius and Voyager were businesses that did lending and that kind of stuff. So there was, a mom and pop had put their tokens in and trying to basically get a yield.
Right.
And then those tokens were lent out the backside to other exchanges and other counterparties. And then 3 Arrows Capital was a hedge fund, crypto fund that, up until that point had a good reputation of being successful. Well, I think their ego got the best of them, and then they made some obviously really bad bets and then melted down. So,
but the point is, crypto has been volatile itself, but the complete collapse, to go to zero,
yes,
is not the crypto. It's
the corporate governance.
Yes,
It's good decision making. It's all that stuff.
Because there's no regulation right now.
Correct. I mean, for all intents and purposes, the only regulations in place is like KYC and AML. It was very basic, right?
Yeah.
But like how these things have to operate, what kind of disclosures there need to be, none of that happens. Like, in some ways you can commingle funds and do other things. You can, almost run an investment bank out of a traditional bank. That
right.
I think the Dodd-Frank kind of separated all that. So crypto's at some point is going to get that kind of regulation. I hope it comes sooner rather than later. But you're right. There's nothing there stopping, bad business choices happening.
So you have your own investment fund focused on crypto.
Yep.
How is that? How are those conversations going with people who's still interested in doing this?
Yeah. I'll first say up front, this is not investment advice. But, I focus on accredited investors. So high net worth individuals, I think, is the current target market right now. And it's interesting talking to them because they are the type that are curious. They might have the cash to be able to, make an investment in something in a fund like this. But they know that they don't know enough to be doing the right thing. And I obviously hear all the bad news. Rarely do you hear good news in crypto,
right.
At least in the mainstream media. So, there's a lot of education that happens with them, and it's something that I use the analogy of a guy wants to go and talk to his friends about he's in crypto and he's at the country club and talking to him about it. Like that's the persona right now that I think fits the investor type that we're looking at. It's many of them that I talk to. Oh, I've done crypto before and I lost 80%. That's not surprising to me because they probably bought at the top when they're hearing about it from
their barber.
Exactly. Right. And that's the time, if they had any, they should have sold it rather than bought it.
Right.
So it's the psychology that plays in normal markets certainly plays in this market at an extreme, I think. So,
but inside your fund though, you're not buying, Dogecoin and
no,
this is not a get rich overnight kind of strategy.
Yeah.
Right?
So my fund focuses on cryptos that solve commercial problems, specifically cross-border payments, trade finance, and supply chain management. So incredibly unsexy topics, but portions of the economy or world that I think have a high degree of friction, and crypto can solve it in a way that's, that friction is what can attribute the value into a token. Mm-hmm. And I believe that business problems will be the first movers to really start using crypto rather than the retail side. I think there's so many safeguards that need to be put in place for retail to touch it before business can. And, we'll get there.
Can you give us any examples of how crypto is solving industrial or business problems?
I think the easiest one to understand is, if you've ever done a wire transfer, that's the SWIFT system. Domestically, it may just be on a Fed wire, a Fed payment rail, but internationally, it's SWIFT. That's a system that was built in the 70s. You could, in some ways, you can think of it as they're faxing messages back and forth to each other. They're not literally faxing, but I think that's a great descriptor of it. And, it largely hasn't evolved. It's a messaging system. Banks have to have cash sitting in other accounts in other banks on the other side of an ocean or whatever, and they debit and credit those accounts. Incredibly inefficient, a lot of parked capital. There's a token XRP that is used by Ripple, the company, to basically reinvent that whole system. They would take US dollars here domestically, buy XRP, transfer it on this crypto blockchain called XRP, and then say we're going from US dollars into, Mexican pesos. They would, in a local exchange in Mexico, sell that XRP into Mexican pesos and settle into the bank account. That all can happen within a minute. Versus days is what SWIFT is normally measured in.
Yeah.
Some single digit number of days, but certainly not 1 or 2. A lot of times it's 3 to 4, 5. And, the fees are functionally zero, but Ripple, the company, has to make money. So they charge roughly $1. Whereas like a wire transfer can be $45, $55, $65.
Yeah. Sometimes more for international
Absolutely.
if you need it done quickly.
Yeah. So, I was recently at a conference where there was like these institutional allocators there. And, I was like, are those types of allocators ready for crypto? And I came in thinking they were. I left thinking I'm not sure. There's certainly some that are, but I think as a whole, they're, at least for my strategy of the fund, they're not quite there yet. They don't understand why I'm not just buying Bitcoin or Ethereum. Okay, well, these things are not created equal.
Yeah, why do you need a fund manager to do that anyway?
Yes, yeah. All the, I can't give you alpha, and I can only give you more cost. Right. I mean, if that's what you want, then maybe. But so there's that. Then they don't quite understand how a token will accrue value over time, and I think that's a very fair question. I was kind of hinted at that before. Is like, there's a Jeff Bezos quote: "Your margin is my opportunity." He talks about like he's willing to work at a very thin margin so he can come into a market that has some margin and feel like he's having a good time where other people feel like they're struggling.
Right.
So, I think that analogy works in crypto in the sense that like, in the wire transfer system, like the time friction, the cost friction, the people friction, 6% of wires going out internationally get lost and have to be touched by a person.
Right.
In 2023, that's insane.
Yeah.
So those kind of thing, and they only can happen on banking hours, for instance, right? Versus 24/7 that crypto can. So,
right.
There's a lot of inefficiencies that come. And I think that over time, these allocators will get a better grasp. They're in some ways, they're trying to apply a stock analysis model to crypto, or they're trying to figure out like, what's the cash flow model? I'm like, well, kind of not really one right now, right? Like,
that's kind of a discovery that we've all had to make in crypto. Originally, it was a stored value. It was the new gold,
right?
Clearly not the new gold.
Yeah.
Clearly, you don't want to store anything. You could lose 30-60%, right? We were told that, oh no, this is an inflation hedge. Well, we just came through that inflation, and that was not a hedge.
Yeah.
Then we were told, it's a long-term growth instrument, and maybe it's that. But it's you told me this before, but the volatility, is it 3 times NASDAQ?
2 to 3.
Yeah.
Amplified, obviously. It's just crazy. I mean, the crypto market in January was up like high 30-something%.
Yeah.
So that'd be roughly to the NASDAQ or something like that. You just have to be willing, the down months are much more vicious than the up months. The up months come slower. So you can have a down 40% month,
right,
or down 50% month if in a really bad case. But it's, the news cycle can just be, challenging from a mental perspective. You just have to learn to have a different, to me, it's about having a longer term perspective and kind of trying to see through the noise,
right,
that is day to day.
So do you think we're still in the phase of like VHS versus Betamax, where it's this new technology, everyone's kind of, oh wow, and then eventually there's only a few survivors because there's thousands of coins.
I mean, there's 20,000 of them. I was actually right before we started, I was talking to the editor over here, and like about how he asked me like, what coin should I buy? I'm like, I get that question all the time. And like, I'm like, okay, if your perspective is less than a year, just go buy a lottery ticket because it's just going to be easier.
Right.
But long term for me, it's about solving business problems. And like, I obviously focus on certain markets, but I, find a market that you're interested in. You like airline stuff. So it's like, there may be a token that focuses on airline, who knows?
Right.
So, there's ways to stay interested. Don't buy a lot to begin with. Buy a little bit, it'll keep you interested a little bit, and then kind of go from there. But it's something that needs to have to me, it's a 3 to 5 year bet. It is not a 1 year bet.
Yeah.
And it's the early days. I posted something on LinkedIn this morning that said, first they ignore you, then they laugh at you,
right, then
they fight you, and then you win.
Right.
Well, we're in the fight stage for sure. I mean,
got it.
And we're going to get into a little bit of that here, I think, in a bit. But it's it's just kind of interesting. That's a Gandhi tweet, but not a tweet, a Gandhi quote.
So let's kind of roll into an education section we want to do for each podcast focus on crypto. So I think some people hear proof of stake or proof of work. What does staking mean?
Yeah.
When you have in relation to, this would be in relation to cryptos directly.
Yeah. So let's kind of set the table here. So Bitcoin was the first blockchain. It kind of sparked this industry to be what it is today. And it is proof of work. Proof of work means that you have computers doing really complex math, basically guessing numbers and trying to basically win a lottery in a set period of time. A block in Bitcoin roughly is 10 minutes. And, they're trying to guess the numbers and earn rewards for doing so. And the reward in that case would be Bitcoin, a new Bitcoin being created. And as part of that work that they're doing, they're also processing transactions, transferring from one wallet to another. Bitcoin really doesn't do much beyond that.
Okay.
So again, it's just a bunch of math, really intensive. Sometimes you hear about the environmental side of Bitcoin or proof of work, that it's, they're using a lot of electricity and all this kind of stuff. Well, kind of true. I buy into that to a certain extent, but also you're starting to see these miners be smart about how they're setting up their businesses, because they are going to areas that maybe have weaker power grids. And they're like, okay, we'll sign an agreement saying we get power when there's excess power, but when you have demand, we shut down. So they're helping improve the grids in some sense, or they're a lot of times they're near, solar farms, or they're near water, hydropower. So, you're not going to see, or nuclear, but you're not going to see them near a coal plant. I can't imagine. So
right.
So that's proof of work. Proof of stake is, I guess, if you might call proof of work 1.0, proof of stake may be called 2.0. Proof of stake basically says, okay, we're going to strip away all that intensive computer like energy consumption portion of it. And we're going to say that if you hold tokens, you can stake them, or basically delegate the voting power, if you want to call it that, to a validator. A validator runs a server or a computer on the network, and they usually have to have so many tokens to be a validator that's accepted. And as part of the transactions that they're processing, transferring one wallet to another that they're validating as true transactions, that validator receives rewards or part of the transaction fee, and then they share that with the person or the people that stake their tokens with them. Does that make sense?
Yeah. So they're getting sometimes in Bitcoin, aren't they getting Bitcoin?
Well, Bitcoin doesn't do stake. So Ethereum, they're getting Ethereum.
Okay.
Yes. Yep.
So they're getting paid in the coin.
You're getting paid in kind.
From
the network.
From the transaction or the network?
That's all one and the same. So yeah, from the network effectively. Somebody's paying transaction fees to do whatever they're doing. A portion of those transaction fees
is that also known as the gas fee?
Exactly.
Okay.
So some networks set it up differently, where some of the gas or the transaction fee gets burnt, it's gone forever. So it's a deflationary nature to it. Some that doesn't happen, and the transaction fees all go to validators.
So why is all this important?
So, well, we're about to get into news over the last week that the SEC thinks it's important.
Got it.
But at the end of the day, I think staking. What is staking the long-term solution for blockchain? I don't know. I think it's certainly better than the proof of work side. And there's other variants that are not staking, proof of work or proof of stake. There's, XRP runs on a consensus thing where there's absolutely no, when you spend a transaction fee, it is burnt, gone, and the validators are just doing it for the good of the network. The Ripple's CTO that started XRP is famous for saying the best incentive is no incentive.
Right.
And I buy into that theory personally, but it's there's all forms of these kind of things. So the reason why we're talking about staking this week versus all the other education things that we could be talking about is the SEC sued Kraken week and a half ago. Kraken is probably one of the top 2 or 3 exchanges in the U.S. I've used them. It's one of the ones I would recommend people use if they're looking at exchanges. They're not publicly traded like Coinbase, but they are, for all intents and purposes, to me, just on the up and up, the same amount of up and up.
Yeah.
So the SEC sued Kraken specifically over their staking service. So we were talking about somebody has to run a server and you put your tokens with it. Well, sometimes it's hard to find that person that's running that server or that interaction. So a lot of exchanges have started doing staking as a service, where they literally do all that behind the scenes work. Mm-hmm. And you basically already have your tokens on the exchange. So you just literally click a button and say, I want to stake this. So you're immediately getting some form of yield, whatever that happens to be for that network.
Yeah.
And the yield can float or it can be constant. There's different models there for different chains. But the SEC is claiming, I'll say the SEC sued and there was a settlement and a fine done all in one day. So obviously this is going on behind the scenes. It just seems I'm never a fan of when that happens. It's like the process didn't play out, but maybe it's none of my business. I guess another angle to look at it from. But Kraken was like, they didn't admit any wrongdoing, but they're also shutting down their staking service for U.S. customers only. So then they paid a $30 million fine, and the SEC trumpets it as a win. Do I think it's a win? No, I think it's a loss for the consumer. The SEC is taking an approach of enforcement, regulation by enforcement.
Yeah.
But the problem is there's not clear rules. I mean, it's to such an extreme that Gary Gensler, the head of the SEC, the same day that they announced the settlement, he tweets a video, a highly produced video, where he is likening or trying to help the consumer understand what is staking versus a steak, like a beef steak.
Yeah.
And it's just like, it's gaslighting.
I don't know if he comes up with this stuff on his own or if there's someone internally who says, hey, we should do this. And he's reading from a prompter, because I don't know that he fully would understand.
Well, I think he understands all the technology. He taught it at MIT. Like previous chair was Jay Clayton, he did not understand this stuff. Yeah. Gary Gensler does. And he is being extremely aggressive from a regulation, or not from an enforcement standpoint. And they're basically, he even came out the next morning. He was talking to Andrew Ross Sorkin on CNBC, and he's like, all this firm had to do was fill out a form on our website, and we wouldn't have this problem. First of all, there's not a form. That is a blatant lie.
Right.
And it's just kind of like, why is he allowed to lie like this? And get away with it. I mean, Congress is the one that needs to clean this up. And it's not like President Biden's going to appoint a different appointee, because this is his appointee. So
I think that is, I don't want to digress on this, but politicians have always lied. He's not a politician. He's an appointee, but that could be a politician.
Right. He's effectively acting like one.
Right. But I think that's where we are in politics right now in general. Mm-hmm. And it all comes down from the top down. So we've had, Biden and all his dementia issues of saying weird things. I keep, he keeps appearing on my Twitter feed, Biden does. And they keep saying things are just flat out not true.
Right.
Not true. And I think that just carries through the administration into other aspects, to where we can now tell flat out lies, and it's just let the people sort out what's true, what's not true from the president of the United States. Now, you could argue maybe this has been done in the past. I don't think it's been blatantly as done in the past. And you definitely had a press corps that was there to keep everyone honest, where the press corps now just rubber stamps it and sends it on out. Yeah. But, it probably started with Trump.
Yeah, I agree.
Where he's like, F the establishment, and created all this bad behavior that now is just copied by the other side. And it trickles down into other forms of government as well. And so that doesn't surprise me.
It's, I hope that one day we can wake up and be like, man, Congress got its act together. But man, it can't come soon enough. I
know, but then the problem with Congress now is there's so much infighting, even amongst their own parties. That I don't know how they actually conduct business. And how do you roll out whole new regulations? Look at FTX. That probably shouldn't have happened if the government had been on top of this from the very beginning.
Possibly.
If it did happen, it would happen outside U.S. territory.
And that's largely where it did happen, right? But FTX.US.
But did it? I mean, if I put money into FTX, it was still going over to...
Well, he made a lot of political donations in Alameda. There was probably some bank fraud and some stuff that will be adjudicated there. But
right.
It's a, Congress can do a lot of good here, and they also can do a lot of bad, right? I mean, there's this whole concept of no regulation is where we're at now, and we're seeing that bad.
Yes.
They could over-regulate and basically try to extinguish us. The problem is it's going to happen in the rest of the world, and the U.S. will be left out.
Correct.
And the U.S. is like the financial center of the world.
Right.
And that's what's at jeopardy here, is they're going to just absolutely ruin the opportunity that is in front of them. And it's just so sad. It's I guess if I have a plea to any congressman, I email my representatives from Georgia here roughly quarterly. I get the same automated response back, but it's reminding them like how important it is that they do their job and try to help clean this up. So, it's just a mess. So
it's interesting what Kraken paid a fine over, the $30 million.
Mm-hmm.
Coinbase is still doing the same thing though. And that's a publicly traded company.
Yeah. So I think the difference, at least the way that I understand it right now, is Kraken was in some cases promising returns that appeared to be higher than the network was producing.
Okay.
So maybe they were, maybe it is a security in that case.
Yeah.
Right? And then the SEC obviously cares.
Right.
Coinbase,
they filled out the form.
They found the form and filled it up. Coinbase's chief counsel tweeted that he was like they would fight this, and he went through a lot of questions and answers in a tweet, like it was a tweet string about how what Coinbase does is slightly different than what Kraken was doing, and how they feel like they're effectively clear. Brian Armstrong, Coinbase's CEO, came out kind of on top of that thread, said, we will fight this in court if they decide to sue us. Like they've decided to draw a line. Right. Up until this point, Coinbase has been rather, we'll just roll over and do whatever you want. It's interesting to see their change in tactic.
Well, they seem to be fairly immune to a lot of this. And I wonder if it's because they are publicly traded.
The SEC is the one that had to sign off on them going public.
Yeah.
So it's like, did the SEC not do their job correctly back then, and now they're not okay with it? If they sue them, like it's just a mess.
Again, I want to digress on a whole different topic, but Google's being sued.
Mm-hmm.
Google's being sued for basically, it's not for search, which I think it's ironic, but they're being sued for monopolizing advertising, which is kind of weird to me because I do Google ads for Wiser, and it's based off of bids essentially. Like the more money I'm willing to pay, the more they'll show me. If I'm willing to pay less, right? So how that works. But it all started with an acquisition, this is my point, with DoubleClick, right? Which the SEC rubber stamped and said, yes, it's okay, you can buy this company. And then years later, they're now suing them saying, no, you're a monopoly. You can't do this. You have to change your practices. Yeah. But yet they literally said, you can do this merger.
Yeah, if I'm not mistaken, it's right around the time they went public is when they did that DoubleClick acquisition. So it's like they were a very different company. The world didn't see them. They were doing good back then.
True.
The question is, what are they doing now? But I agree with you. Like, in some sense, that whole that ad market is almost a winner take all type situation. You just have Facebook and Google at this point.
Pretty much.
I mean, you have Twitter kind of, but not really.
There's Bing, supposedly. Right. Your grandparents use that.
But they're all rounding errors at this point.
Very true.
So
yeah, very true.
But so back on topic here.
So my point in all that is I could totally see the SEC
changing its tune,
even though they rubber stamped something in the past.
Yeah, it's it'll be interesting to see how it plays out. So the last little bit on this Kraken thing is, so there's 5 SEC chairs, right? And then obviously commissioners, and then there's 1 chair.
Right.
So any vote of 3+ votes kind of rules today. There's an SEC commissioner, Hester Peirce. She is what I would consider the most level-headed of all the 5. I've certainly read up on her more, or kind of seen videos of her talking about different policies way more than the others. But she literally, the same day that the Kraken announcement, the video for Gary about staking came out, she basically put a press release out on their website. This is her opinion. She obviously voted against it, and she said she called it paternalistic and lazy to do what they did. Like, she's becoming more and more blunt with her choice of words, and I'm all for it. And it just added that it's the regulator's solution to registration violation. It was to shut it down rather than to help, and how does this help serve the people?
Right.
Which, people forget the SEC is there to protect the retail investor.
Right.
And what kind of protection are they doing here? They're actually making it harder for people to do staking. They'll likely go offshore to do it.
Yeah.
Or they won't get the yield at all. It's like, if you buy any sort of conspiracy theory hat stuff, there's a chance that this is like the old guard banking cartel in the U.S. not being happy versus crypto.
Yeah.
And the SEC is the one doing the bidding at this point. So,
well, if you believe in all the all the dialogue over the years about how there's only like a few families that control the world. Mm-hmm. Crypto definitely
falls in one of those buckets.
Yeah. I'm just saying it's a threat to them, right?
Right. I mean, it's in some ways it's so hard to unwind all these different threats and angles at crypto. I mean, you have the theory that it could be the Rothschild / European banking cartel fighting the Fed.
Yeah.
And Europe is more bought into crypto right now than the U.S. is. So maybe that's the angle. It's like, okay, we can't use the tool that they're using.
Right.
I don't know if I buy into that theory as much as other things about, and we can kind of get to it here, but it's a theory that it's more of a China, or what it appears to be a China-U.S. story in crypto. So if we rewind back to November, what kind of started the FTX collapse was CZ from Binance. They're not really from China, but it gets wrapped into the China story very easily.
Right.
I mean, technically CZ's from Canada, but he has Asian ancestry for sure. And he's the one that said, "Oh, we're selling our position in FTT tokens." That started the bank run that eventually, blew up FTX. At least publicly, it was already rotten at the core, obviously. So, so that happened, and then there's been always this undercurrent that negative things happen with Binance, and they're not audited, which we've talked about in other podcasts, and all these things but Binance is by far, in a way, the biggest exchange. I think if you add up 2 through 5, Binance is still bigger. Maybe 2 through 10 for that matter. So, there's this angle of, okay, we're suspect of Binance. So, over the weekend and into yesterday, the NYDFS, so the New York Department of Financial Services, I believe, was who oversaw the bank Paxos. Paxos is the bank that has been helping Binance run a stable coin called BUSD. So it's paired to the dollar 1-to-1. They're doing all the audits, doing all the things that you'd want to see happen, right? It's a U.S. regulated bank, Paxos. Well, NYDFS came and basically said with the SEC that we're reviewing they sent them a Wells notice. Okay, so that's, for those that don't know, I recently learned this. A Wells notice is, we intend to sue you. Please tell us why we shouldn't litigate. It's nothing really beyond that, right?
Great letter to
receive.
It's
It's like a shot across the bow, right? Something you never want to get, but here it is. The theory is that is the weapon, that they actually know that it's not a security, but as part of, if they get into litigation to litigate to find out that it's not a security, during that whole time, there is an injunction in place and they can't mint or create any more of this Binance USD.
Right.
Binance USD is basically the stable coin that Binance Exchange uses across a lot of its pairs, instead of using USDC or USDT, those stable coins. So they're basically starving the exchange of liquidity. And the only direction that the market cap of BUSD can go is to zero, right? I mean, it's probably $20-something billion worth of locked value. So it's just an interesting theory to hear that maybe the U.S.'s way to get to Binance, because they don't really have arms that can technically get there, is fine, we'll just turn off the spigot of money and we're going to starve you. And then is this, I'm not saying this is the Phoenix type scenario, but is this the rebirth of crypto, the very early stages of it? So we have to see the downfall of something else before we can see maybe U.S. regulated.
That's interesting. I never would have put that together.
I can't admit to that theory being my own. I was reading it this morning on Twitter. I'm like, dang, that's interesting. Super fascinating.
So I wonder, there's no lead spokesman for this right now.
The lead spokespeople for crypto used to be the Bitcoin maxis. They've been pretty quiet lately because Bitcoin's not going up.
True. But I just wonder if, let's fantasize for a moment, Elon Musk all of a sudden comes out with a legitimate weird coin Dogecoin or something. But something that has utility to it. He seems pretty immune from SEC, well, not SEC scrutiny, but they lose every time.
He's got some kryptonite somehow.
Somehow. Well, when you're launching Well, I just feel like when you're launching stuff into space and you're the only transport for the U.S. government,
right? You have some reach.
There's probably some reach in there because you have a lot of leverage.
Yeah.
But yeah, and when your satellites can tilt the war like in Ukraine
and turn off the internet,
like literally, like Congressman. Well, I think the lady from Maine, what's her name?
Elizabeth Warren.
It was like. When he moved all the satellites over to Ukraine to help Ukraine, she's like, one man who has this much power should not exist. And I'm like, yeah, you should fear him. You really should.
Yeah.
But yeah, you wonder if someone like that was like, look, this is what we're going to do. This is what we're going to change the world with this. If it would change that dynamic. Right now, it's more, it's a large community, but you yourself cannot take on the U.S. government.
Right.
It would take somebody like
it's
that.
Interesting. Like, I don't foresee him launching a coin. I think.
No, I'm not saying that he would. In fact, I don't see him doing that at all. But I just wonder if it was somebody like that.
Yeah.
Is that what it's going to take to push us?
Maybe. I think this is the cynical side of me. I think what it takes to get regulations in place is for congressmen and women to get their bets in place.
Yeah.
And then
more bad things to happen, unfortunately, maybe.
Right, potentially, but there's this, whether you call it insider trading or not, but that kind of style of stuff, they just need to be able to get positioned in crypto. And then guess what? They're going to have the solution. They're going to write the laws. It's going to get passed. Like that's
right.
That's how this country works, unfortunately. And
well, it's how we get red lights.
Right.
Right.
Yeah.
And stop signs.
So it's, I wish that wasn't the case, but I think that, we had a crisis in FTX. We might have another one brewing with this Binance thing.
There were things happening even prior to FTX that we probably should have taken notice, and maybe Congress did.
Yeah.
But there was nothing really public about it.
Yeah.
FTX was even bigger. And what's funny is that the individual people who got caught up in that will probably never be made whole.
Correct. Yeah, especially considering what the attorneys are charging currently.
And then what are the politicians doing? They're donating FTX money
to
charities.
Yeah.
That they probably get kickbacks from or benefit by promoting this charity. It's
messed up.
Yeah. Growing old and wiser is not always
not so fun.
It's not so fun. You want to live in this ignorant bliss that everything is great, and that's not the case at all, actually.
Yeah. So the last bit of thing that I read on the Paxos and BUSD drama is so the stablecoin USDC is the U.S. domiciled one, in addition to the Paxos BUSD. It is by far bigger than BUSD, and it's to me, there's a chance it becomes in some form the retail version of a CBDC for the U.S.
Yeah.
So I think that they have more ins than they appear to have into the government at this point, or they're establishing those relationships. And the rumor is they're the ones that tipped off the NYDFS about some funny dealings that Binance was doing with BUSD. So obviously they're competitors.
Yeah.
And
they're going to take down Binance. Binance took down FTX.
Right. Like thinking, give them a taste of their own medicine.
I feel like this is like the Minions movie in Krug,
And if that wasn't so true, it'd be funny.
Right.
But yeah, so, there's more to play out there. And hopefully we don't have to have another meltdown in the sense of FTX.
So shift gears just for a minute. Where do we stand right now with having a U.S.
CBDC?
Digital currency?
There's Project Hamilton of the Fed announced last summer or fall, something like that, about the exploration they're doing around it. I haven't heard tons of rumbling since that kind of came out.
Yeah.
The U.S. is very much a two-tier banking system. There's going to be in all likelihood a two-tier CBDC or two separate CBDCs. If anything, I think U.S. is one of the last countries to adopt it because being this, at least from a commercial standpoint, I think there's a chance that the retail
and there's really nothing for us to fear from that. Essentially we're doing it now. If you have Apple Cash, if you have Venmo, if you have Zelle, any of those services, is it not essentially the same thing?
Yeah, on the surface, it would appear to be. I think the risk with the CBDC that you don't currently have with the current payment rails is, the transaction data would be able to flow
directly back to the government
or whoever's running that, right?
Yeah.
And then there's a privacy aspect. So
but Venmo knows you paid Sally $5 for the slice of pizza.
But no, she likely only knows you paid $5 to Sally.
Not in the pizza unless you told them that.
Right. There's no there's no line items of all the things you bought. That transaction data is not going back. And then that becomes, the example I use is like if, because China is very much further along in this than the U.S. is. Like they're trialing a CBDC, and they could tie it to their social credit score system thing that they have, and say, guess what? We know you just bought some sugary stuff at the store. We know that you got diabetes. Oh, guess what? Your money's not good, or your healthcare is not good. Like there's all these like other ramifications that we've never really had to consider. So, do I think that will happen in the U.S.? I hope not, but
never know.
Never know. And like. The world's just crazy.
Yeah. Well, think of the Patriot Act after 9/11, which was really necessary initially.
Right.
But then it was used.
It's gotten warped
For so many other things that have nothing to do with terrorism.
Yeah.
Right.
So it's a.
That's interesting. I just asked that. There's a financial advisor out in California, all over my Facebook page, advertisements. And her whole solution, she's very much, if your advisor says to buy and hold and ride through this rough period in the market, that's crazy. That's old strategy. I have a new strategy. And her one of her fears, people who sell annuities, they like to talk about all the bad things. And so one of her fears was, the U.S. is testing on a new currency. And this is another reason why you should buy an annuity. And she's actually like one of Investopedia's top 100 advisors, which is based off your Twitter following.
Great.
You can follow me at wiserinvestor.com or at wiserinvestor on Twitter. Yeah. I think I have 200 people. She has thousands. I mean, thousands. And I felt really bad because like, man, my industry has such a low barrier to entry. Like any schmuck can say, I'm a financial advisor, take a super easy test and just say I'm an advisor. And then they get Twitter and they get followers and then they start producing junk. But I watched the video. Like I was like, let's see what this person's advertising techniques are. And the more I got into it, it's like, wow, I could see how uneducated people would be sucked into this big time. And when she said that about the currency, it's like, I don't think that's something we have to necessarily fear from an economic standpoint because we have a digital currency the same as a dollar bill in your pocket. It's just on your phone.
Yeah. But there's,
I can understand the privacy part.
When money becomes programmable, that's what crypto is.
Yeah. True.
Other possibilities are unlocked, good or bad. And you have to understand the risks. So,
and maybe that's the digital age that's going to be here for our kids for sure.
Absolutely.
If it comes to that, the U.S. will be a slow adapter. But just because a country has that doesn't necessarily mean that we're behind, though. Because we're not living in Croatia or
but
some third world country.
The risk for the U.S. as a whole, not individual citizens, but I guess it eventually trickles down, is that innovation and the people willing to build the next version of companies and all that kind of stuff moves outside. And like the amount of wealth that's been created in the U.S. in the last 25, 30 years due to technology growth,
we lose our competitive edge.
It's gone. Like this is the next wave.
So going back to a comment you made earlier, could you not argue that the U.S. needs, except for international transactions, the U.S. doesn't need a digital currency as much as other countries, partially because we control our own dollar. We can manipulate our own dollar, meaning that I don't forget about a national digital currency. Just talk about Bitcoin and all that in general. Where if I live in Europe, I might be a higher adapter of cryptos from the simple fact that the euro is controlled, but you don't live in the euro. You live in your country.
Right.
And your country could be a Greece or it could be a Germany, right? And so you might need that crypto for stabilization potentially, right? Because what you can buy in euros in Greece is very different what you can buy in euros in Germany, where we don't have that problem here. Every single state in the United States uses the dollar.
Yeah, and
So therefore adoption would be higher, just like it's higher in third world countries, because it's kind of like, well, everyone in third world countries, they all have cell phones. The cell phone towers are so much better because they don't have landlines. They
Right.
skipped like the whole industrial age.
Right. Right. They skipped it for certainly a generation there. Like, it's a possibility. I think that the challenge with the U.S. again, it's like, where do you want your long-term advantage to be? And it's like, you don't want to be playing catch up. Like right now we have the advantage.
Yeah.
We can like parlay that of sorts. And like the risk is that we end up having to be like, you always hear these other places around the world, like, or even in the US, we want to be the next version of Silicon Valley. I'm sure you do.
Right.
Like a ton of wealth was created. Most people don't know it came out of the Cold War.
Yeah, that's true.
I mean, all the innovation with chips and stuff to miniaturize it for the Cold War, a lot of that science was done in Silicon Valley, and that's where a lot of the I guess the knowledge base was built. And then it obviously blossomed to other things. But, you know, it's just other places are trying to play catch up or find a different angle. And the U.S. has got these angles. Like, I wouldn't say like be overly aggressive and like be mean about pressing your advantage, but when you got an advantage, press it. Like,
right. Yeah.
And for whatever reason, I think part of it's due to age, unfortunately. We have a group of representatives in the government that doesn't understand the technology. They fear it by nature of not understanding it.
Right.
And they, get off my lawn type thing. So, yeah.
Maybe Teton Capital needs to have, Teton Crypto Capital needs to have a DC office and offer lunch and learns.
That sounds miserable.
Offer lunch and learns.
Listen, Brian Armstrong, again, from the Coinbase CEO, I saw him tweet that he was in DC doing meetings and something canceled, so he had some free time, and he tweeted it, and it sounded like 3 people showed up.
Oh, wow.
If like 3 or 4, like if he can't get more than that, there's not a chance I'm going to get anyone's ear. So
maybe he was afraid that he was the next SBF.
Yeah.
Keep their distance.
I'm sure there's certainly some people that are doing that now. So,
all right, Robert, great conversation as always. If we want to learn more about your fund, how would they do that?
You can reach out to me at robert@tetoncryptocapital.com.
Great. Thanks, Robert.
Take care.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening, that way you don't miss any new episodes. We would also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. We would love to hear from you. This episode was produced and edited by Lilton Moore. This podcast is strictly for informational purposes only and is not to be considered as investment advice or a solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investment advisor with the SEC. The host and/or guest may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guest of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.